Trying to identify a technical trade but don't know what to look for? Stick around to see my top 5 areas to look for when identifying a good technical trade. How's it going, guys? Ryan here again with another episode of Stock Market Basics, and today I'm going to show you what I look for when I'm trying to identify a technical trade on the market. One thing to realize when you've gained enough experience is that trades will often present themselves to you. You don't really need to go looking for them, and using the tools that I provide to you in this video will allow you to get to that point. The first and everyone's favorite thing to do is learn about chart patterns. Effectively, you want to be able to learn all the different kinds of chart patterns that are available. Obviously, there's quite a lot, so pick the few that work for you and try to identify those on some stocks on the market. Some favorite patterns are the cup and handle pattern as well as flag patterns, and this is really because they're easy to identify and relatively reliable when trying to pick what direction a stock is going to go. This is because a lot of people are often looking for these patterns to trade and often looking for signals to buy or sell the shares. Now, there's lots of different patterns out there, but you really want to work out what ones work for you, and often it's best to experiment a bit and determine, hey, what can I use? So identify some shares, some patterns that you can see and see how they play out. You don't necessarily have to buy in. You can just view them and mark a point where you'd say, okay, I'd buy into this share now and see what happens. If it goes up, awesome. If it doesn't, then hey, you haven't lost any money, but you've learned maybe that pattern isn't for you and you haven't been able to identify it as well as you thought you did. Now, the second thing I like to look at are key technical indicators in the market, and these are things like moving averages of the stock market price, the RSI, also known as the Relative Strength Index, or the MACD. The best thing about technical indicators is that they're data driven and reflect what is currently going on with the share price. Using these in conjunction with each other can give you quite a good look into the future of what is going to happen, and you'll be able to make a pretty educated prediction on where the share price is going to go. Starting with the simple moving averages, the two I like to use are the 50-day moving average and the 200-day moving average. These really show you where the stock is going to go and if there's going to be a change in trend. If the 50-day moving average crosses above the 200-day moving average, the price is likely going to start increasing and be an uptrend. Whereas if the 50-day moving average crosses below the 200-day moving average, it's an indicator that you should probably sell the shares because the average price is going down. The RSI is a bit more technical. It effectively allows you to see the current strength or weakness of the share price and how quickly it's moving up or down. So the RSI goes from 0 to 100. The average range is 30 to 70 in between those two brackets. If it's staying within these boundaries, it's moving at a relatively normal rate. So basically, if it's above the 70 point, then the share has been overbought, which means it's likely to drop in value soon because too many people have been buying, and as a result, they're going to sell to make profit. Whereas on the opposite side, you're going to see the RSI drop below 30, and this means it's oversold, which would generally indicate that the price needs to come up and demand will come back through. Now, the third one you probably won't need to use if you're using simple moving averages, just due to the fact that it is an indicator that shows the relationship between two averages. So similar situation, if the short-term line crosses above the long-term line, you're going to see an increase in the price due to the fact that it's showing that the strength is higher for the share and vice versa. Moving on to the third way in how to identify a good technical trade, and we're looking at the support and resistance points on a chart. The support and resistance points on a chart are usually determined by where the share price has lingered for a significant amount of time, and often there's been a lot of buying or selling action at these points. In order to determine the price action of a share, if it breaks either of these points, whether it be the support or the resistance locations, it's going to identify whether the share is going to decrease in value or increase in value. If the share price breaks below the support point, then the share price is going to continue to fall. Vice versa, if it goes through the resistance, the share price is going to increase in value and hopefully shoot up quite significantly. Now, one interesting concept to look at is when it does break through a price, for instance. So let's say you've got a resistance point of 50 cents and the share price manages to go from 45 cents to 50 cents, then cracks through the 51 cents. You should see an increase in the share price pretty consistently. Now, if the share price then decided to take a fall, that previous point of resistance now becomes the support for the share. So if the price is continuing to drop and it hits the 50 cents point, hopefully it bounces off it and it goes back up. But otherwise, if it breaks through that 50 cent point, then the price is going to continue to drop quite significantly. This makes them pretty easy indicators to determine whether or not you should buy or sell a share. If a price breaks through the resistance, you want to buy because the stock is uptrending and hopefully will shoot past the current share price pretty quickly. And alternatively, if the support is broken, then you want to sell the share because it's going to continue to drop in value. Fourth way to identify a good technical trade is the buy to seller ratio. Effectively, you want to find a share that has a large number of buyers compared to sellers. If there is a large number of buyers and you can consistently see them putting bids on the market and having to buy rather than place orders that get filled, then you can see that there is a significant demand for the share. Alternatively, if you see that there are a lot of sellers and not too many buyers, then people are wanting to get out of the share. You'll see them actively selling into buy orders that currently exist. This is something you really need to be careful with because these numbers can effectively be manipulated by other users of the stock market purely due to the fact that you can put in fake buy orders at certain prices or fake sell orders at certain prices and effectively manipulate the numbers at the bottom. Obviously, you need to be able to hold those shares to do that, but as a result, that means that this indicator shouldn't be relied on its own. The fifth and final way to identify a good technical trade is through looking at the liquidity. Once again, you don't want to use this on its own. You want to use it as an indicator that goes alongside others. Stock that has a high turnover will allow you to essentially easily enter and exit the share pretty easily because there's a large amount of shares being turned over. This is something you particularly want to look at for your trades which are a bit more risky, as you'll need to be able to exit very, very quickly, as well as shares where you have a large position in them due to the fact that it's not easy to sell a couple of million shares at a single point in time if there's not many people willing to buy them. The only good scenario really where the liquidity is low and you want to be in it is where the register is tight and there's not many shares on issue. As a result, the share price will naturally climb as people will be forced to consistently buy the stock if they want to gain a position. Thanks again for watching another episode of Stock Market Basics. I hope it helped you a lot. Please remember to subscribe for more content, leave me a like and comment any other content you would like to see. I hope you guys really enjoyed the video. Have a great day. Happy trading. Cheers.